Hey, good morning, everybody, and welcome to another Mortgage Coach Tuesday sales call. Our goal every Tuesday morning, 9 o'clock Pacific, is to deliver the mortgage industry's absolute best weekly sales meeting. We always have great guests, speakers, authors. Some folks are, we have realtors and top producers. Today, we have a call full of top producers. My name is Dave Savage. I'm the CEO of Mortgage Coach. You're on this call today. You are a friend of mine. Connect with me on LinkedIn, Facebook. Hopefully everybody has downloaded all the Mortgage Coach apps. So our mission at Mortgage Coach is to help every family that gets a mortgage to make a confident decision and one that aligns with their financial goals in a manner that they actually understand. So we're committed to training. The first 3 weeks of every week, or first 3 weeks of every month, we have training calls, basic training at 8 o'clock in the morning, advanced training at 2 in the afternoon. So this week we're off because it's the last week of the month, but that kicks right back into June 1st. So today I've got 4 amazing guests. Welcome to the call, Danny. It's good to have you, my friend.
Thanks, Dave. Great to be here.
Well, it's always great interviewing you. You are going to kick off things in just about 3 minutes, and I think it's going to be a reminder to people who have heard the last call, but I know there's going to be some new information, especially with the new mobile video. So looking forward to that, my friend. Lori,
Absolutely.
Lori, welcome to the call, and thanks for making time last minute for the Mortgage Coach team.
You bet.
Good. And then Sean, you're going to go third, focusing on how you're delivering value at open houses with Mortgage Coach and how you're using the new mobile video app. So welcome to the call, Sean.
Thanks, Dave. Looking forward to it.
Right on. And then Kim Perry, think of yourself as my co-host today. Feel free to add some color or ask some questions between each guest, and then you're going to wrap all this, help tie this together on what loan officers should be doing to prepare for TRID today. So welcome to the call, Kim Perry.
Thank you, Dave.
Right on, guys. So a couple minutes of reminders on past coaching calls. Last week, I interviewed Tim Brahim, and it was all focused on being efficient. So he gave very tactical tips to be more efficient. You know, my favorite was he made a great case for how you should be using audio and video. And I hear from Mortgage Coach users that for the 1 minute it takes them to create a video or 2 minutes, it's time 5 how much that would take to create an email. So 1 minute of video content in Mortgage Coach TCA would take 5 minutes or more in an email. So Tim highlighted a lot of great efficiency tips. That was my favorite. That call has already been watched, the recording, over 80 times. So if you missed it, check it out. In today's busy market, getting ideas tactically and strategically to be more efficient, I think is valuable. I want to really set up today's call around my call 2 weeks ago with Steve Harney, where he really broke down what Google calls 0 moments of truth, and talk about how that matters, the new sales process with realtors and with loan officers. So he talked about how important it is to have a great online presence. We talked about what most realtors and mortgage professionals have been doing traditionally, and we all know that traditional loan officers are delivering information in fee worksheets, and we talked about the new modern way of delivering information. And so Steve Harney's insights, where we're really integrating his, call it generic market insights, with a personal mortgage experience. And I had asked Lori Richardson to join the call because she was the example that Steve used when walking through this. So Lori, I'll bring you in about 10 minutes, but thanks for sharing some of these insights from a week ago, and look forward to really drilling down on this. Thanks. So let's kick it off with Danny. I did this call with Sam Hansen and Danny, it's been several months. That call has been watched almost 500 times. So if you have not watched it, it was incredible. I mean, Danny and Sam did a great job. The Mortgage Coach training team loved this call so much that we actually edited each of his 5 realtor strategies into anywhere from a 3-minute to a 12-minute training video. The one that we're going to focus on today, I asked Danny to come on this call because Steve Harney, when he was preparing to deliver Mortgage Coach value, just loved this counter offer analysis. So Danny, why don't you explain what the counter offer analysis is and then let's walk people through the counteroffer analysis and your what you call cross-qual analysis.
Yeah, absolutely, Dave. So just to kind of give a quick why behind the counteroffer analysis, what we're finding is that the whole home shopping process oftentimes becomes extremely emotional. And people, when they're in the process of negotiating for a price for the house, they get caught up on really arbitrary details. You know, they'll say things like, we have an absolute cap of price, and we will not go over it no matter what. But they really fail to consider the context of what that decision of creating a hard cap of price might mean for them. So what the counteroffer analysis, it really is just an extrapolation of what I call the cost of waiting analysis, which we can use independently of a counteroffer. We can go with the cost of waiting analysis even if the person is just shopping and maybe they're hesitant or they're getting discouraged by the market and they're feeling like there's a little bit too much competition and they should step out for a little while. We can combine a lot of outside data. So outside of Mortgage Coach, there's a lot of detail that we can provide to the client, but then what the Mortgage Coach total cost analysis experience allows us to do is take all that and drive it home with a really concise message, which is, here's what this is going to really cost you. If you wait, or if you decide to pass on this counteroffer, which you now have certainty of how much you're going to have to increase either your total offer price, or you can extrapolate that into total monthly payment. Right now you have certainty, but the future is uncertain. And in fact, we can predict out what the future is likely to hold by doing the analysis of things like, taking the rate watch tool and showing the client the trend of interest rates and where we sit in terms of the support and resistance. Now, you don't want to go into super deep detail with every single client, but what you can do is at least show the trend, and it's pretty intuitive right now that interest rates cannot stay at these extraordinarily low levels for much longer. And there's a lot of, there has been for years chatter of rates going up into the high 4s, low 5s, and that's really the trend for that has kind of softened, or the idea of where rates might be in 2016, 2017 has softened a little bit. But even if we just take what I would describe as minor shocks to interest rate, well, a 3/8 change in rate is about what we saw over the last 3 weeks once we, had that kind of spike and run up, which looks like it's right now about to kind of swing back again, but we'll see how that goes. But 3/8 in interest rate, when we're looking at a purchase price of, in this person's case, they were looking between $875 and a $900, or $875 was their offer, $900 was the counteroffer. Interest rates at that time, and this is a real example, interest rates at that time for high balance loan were 3.99, and we were suggesting that the likely comparison point for 2 to 3 months down the road was about 4.375. No crystal ball on that, but pretty safe bet to see about a 3/8 rise in rate. And then we showed what it might look like if the price of the home rose just $10,000. So we're not talking about a 10% year-over-year increase in prices. This is a really conservative estimate of where 875 home might be 2 to 3 months from now in the current market trends. And then go ahead.
Oh, I didn't mean to cut you off. Go ahead, Danny.
Oh, no, just to tie it together, what we essentially showed this client was if they chose to walk away from the 900 offer and the interest rates rose 0.3%, they would actually end up with a higher monthly payment, meaning their cash flow, which is what they were really making their decision on, would be hit more significantly by that choice. And if the home value also went up $10,000 in the meantime, they would be hit double by that effect.
So couple Mortgage Coach quick hits. So anybody who doesn't know how to create this total cost analysis with the cost of waiting so that you can support this conversation and this strategy, come to our Thursday call. Also, there are some videos, so you can always email support@Mortgage Coach if you want a video on how to do this, but also this Thursday at 9 o'clock, we'll feature this strategy. So Danny, let's just do 1 more minute on this, and then let's get into the cross-qual. But what is some of the scripting? I think everybody, either if they don't know how to present the strategy, we'll do that on Thursday, but helping your realtor understand when to bring you in and some of the scripting that you use when you're talking to a family that's in this just call it a point of tension. You know, they want to buy this home. It's going to cost more than it is. You know, they're stressed out. The realtor's stressed out. Give us some of your, you know, call it the conversation around the TCA that you're having with families. Just do a minute or two on that, and then let's transition to the cross-qual analysis.
So the whole process starts, you know, in some cases months in advance. So we meet with the realtor and we introduce the total cost analysis as a tool for them to take emotion away from their clients, which is a huge advantage to them. Because when people are acting emotionally, sometimes they'll act irrationally. And of course, the realtor and the client, deep down, they want to make the right decision and they want to make a well-informed decision. So we sell the idea of the total cost analysis and the cost of waiting and the counteroffer analysis way in advance. So the realtor's familiar with it and they can then, you know, introduce it to the client when they're in that moment. And what they'll tell the client is, you know what, this is a big decision. You know, obviously there's you know, the seller's, you know, looking to get up to this price. We can negotiate around, or you know what, why don't you just talk to Danny really quickly so he can put some numbers on this decision, because 25,000 is a big number, but it might not translate to what you're thinking of in terms of monthly payment, and then maybe he has some other insights for you as well. And then they'll introduce that to them. We'll, of course, already have done a total cost analysis with the client, either when we did our initial consultation or when they did ultimately make the offer on this particular property prior to the counteroffer. So this might be the third total cost analysis we review with them. So they're very familiar with it as a tool for understanding this information.
Hey, Lori, yeah, thanks, Lori. And again, Lori, in the GoToMeeting, you can just check that you're on the telephone. GoToMeeting, click audio, and put that you're on there. So, okay, so cool on that. I think the big takeaway for everybody on the call is how important it is to do this way in advance for the family. And then, Danny, I know you just created your first video on a mobile device. So you made the point that this might be the third TCA. If you could just speak to your experience and how you like the new mobile app, creating a mortgage coach video on a mobile app. Any thoughts on that?
Well, the mobile app was awesome, Dave, and thank you for encouraging me to learn a new trick. I mean, being able to just on the fly grab my phone, you know, track down the section to make a video. I mean, it took me less than a minute to put the videos together. I had a little bit of technical difficulty getting them uploaded, unfortunately, on my side. I think I know what the reason for that is, and we can talk about it later. But the actual process for creating the video took about half as much time as firing it up on my computer, which was already an easy process.
Right on. Well, let's do another 5 minutes now on the cross-qual analysis, and then Lori, I'll be bringing you into the conversation in about 5 minutes. So tell everybody the why behind the cross-qual, and let's talk about it.
So what the cross-qual really comes down to is two fundamental things, and that's trust and execution. So the listing agent will ask us to get involved in their listing only if they trust that we're actually going to be a better solution than the average lender out there, especially people that they don't know out in the marketplace. So what they'll introduce to the buyers, either in the confidential remarks of their listing, which will say, you know, all offers must be accompanied by a pre-approval from Caliber Home Loans, you know, Danny Horanyi at Caliber Home Loans, or in a counteroffer, they'll say counteroffer requires within 48 hours to be pre-approved with Danny Horanyi at Caliber Home Loans. So they're introducing to the buyer that it's a barrier to entry to become the buyer of the home or to get into escrow on that property. So why do they do that? Unfortunately, still to this day, there are pre-approvals that are being issued that are not fully vetted. And I would say about 20% of the cross-qualifications that we do end up with a failed qualification, meaning that the other lender didn't review some critical guideline, or they miscalculated income, or they misread a credit report item and didn't recognize that there was a foreclosure or short sale that was not being picked up by DU. And those are deal breakers that would have been found by underwriting, which of course the front end kind of in the street loan officer was not either experienced enough to find or they just didn't have the time to find. So we get involved at the front end and actually get introduced to a client as they're making an offer on a property that one of our trusted agents is the listing agent for. And then we essentially go through a full pre-approval process. So one kind of word of caution is this, the cross-qualification process is hugely time-consuming. You really have to be resourced properly to take them on, because you really, in order to promote this in a really positive way, the answers that you give need to be as good or better than any other lender that might be in your marketplace. And you need to be able to turn those around in about 24 hours. So it can be a pretty big drain on resources, but if you're able to do it, not only will you be providing value to your listing agents, and the way we describe it to them, and it's kind of a symbiotic relationship, is we want to grow our businesses together. If we're chosen as the lender for their listing, they know that they don't have to babysit the lender anymore. There's a systematic process for communication. There's an inherent foundation of trust where they can, instead of taking all that time and energy that they typically spend babysitting the lender, they now can go out and get more listings or nurture their client base better. So we essentially grow businesses together with that trust. And of course, our position is, if we really are the best solution for that listing agent, not because we have some financial arrangement, but because we have a great execution strategy, then we are likely a very good solution for this buyer as well. And then we have this opportunity to communicate to that person our value proposition, our interest rate proposal, and we're able to go through that process with the highest level of respect for the effort that another lender had already put into this. So I want to just put another footnote on this, is if we find that the other lender did a tremendous job and they're clearly a professional and are going to provide an experience that is at least as good as the one we can provide, that's pretty much where it will end. We will basically just share with the listing agent and the seller, of all the offers, this is the one that seems the strongest from a qualification standpoint, or we'll create a hierarchy of offers in terms of their likelihood to get to the finish line with their loan. But in cases where it was really clear where the other lender did not provide a solid service, through conversations with the buyer where they have no clue what they're even being offered, or they were not introduced appropriate products to their particular needs, we'll take the next step of going through a total cost analysis, showing them, well, here are some of the data points that absolutely should have been shared with you, and some context behind them so you can make a really well-informed decision.
And from what I recall, last time I interviewed you on this, you're converting 20% of these cross-quals into a loan. Is that right?
Recently, it's actually been a little, well, it depends on how you look at it, but yeah, recently it's actually been a little bit higher, because the quantity of offers per listing is going up, or at least in our market. So sometimes we'll get, for example, we'll get 5 cross-quals for one listing, and we'll convert 2 of those. So in one sense, you can say, well, that was a 200% conversion because we converted 2 for that one cross-qual event, or you can say it was a 40% conversion because we had 5 opportunities and got 2 of them. In either case, it's amazing.
So Mortgage Coach, I mean, this is a huge opportunity, because this is a strategy to go to your listing agents and say, hey, I can deliver tangible value and service. You can net it out with how working with you is better. If you have the rapport and the relationship, and they trust you as an operator, as someone who executes, which, by the way, you can't play this strategy if you don't have that kind of system. You're not well resourced for it, and you really don't execute. But assuming you do, now you can say, look at the service I'm going to provide to the families that are making offers on your property. In addition to a second opinion, they're also getting a Mortgage Coach TCA. I mean, let's face it, everybody wins. So a reminder to everybody, the scripting and the specific strategy for this is on our YouTube page under the 5 strategies playlist. I've also put this on Facebook. It's a tremendous strategy, because when you look at all the stakeholders around the buyer, let's face it, the realtor is critical. The genius father-in-law that's giving people advice, some of it good, some of it distracting. Everybody's in the loop if you deliver this with a TCA. So make sure you do that. Also, make sure you guys are using the mobile feature. If you downloaded and uploaded the newest app in that upper left-hand corner, just click on that. That is the gateway to a whole new Mortgage Coach feature. Click on that little head, that body shot up there, that profile, log in, and boom, you've got a whole new tool, a whole new feature. So before I bring Lori in, I would like to push a poll and know how many of you have created a video on the Mortgage Coach app. Real quick, so far 90% say no. 20% of you have voted. Everybody, please give me a vote. I want to know where the bar is at. Again, this new feature was just added 2 weeks ago. We have not marketed it. We have not promoted it. So really only the people on our Tuesday call really know about it. And so got it. We're at 10%. So thanks for filling out that survey. Hey, Dan, anything else you want to add before we transition to Lori?
Just the feedback that we get from these cross-qual analysis. I'm sure anybody that's using Mortgage Coach Edge and the total cost analysis has heard from a client, wow, this is really cool, that it has this cool factor associated with it. When you're doing the cross-qual analysis, one of the most common things I hear is, why didn't my guy do this for me? And when I hear those words, I know it's basically the nail in the coffin that at least we have a foot in the door to keep the conversation going.
Love it. Well, hey, Danny, thanks so much. Hey, Ken Perry, 1 minute. Any questions or color you'd like to add to that before we bring Lori into the call?
No, I love it. I love hearing that. Especially, I mean, there's this myth that every loan officer is great now, and because all the bad ones are gone. But I love this because it's like, well, you might not have a great loan officer. Let me just make sure and do that double check. So I could totally see that gathering business. It's great.
All right. Well, hey, Danny, feel free to stay on the call, add some color, ask some questions of some of your other peers on the call. But I'm going to bring in Lori, and thanks so much for jumping on and adding all this value.
Thank you, Dave.
All right. Well, hey, Lori Richardson, I've seen you at Sales Mastery. I've known you for years. I've been on you to become a mortgage coach for more years than I can imagine. And I know you have recently started creating mortgage coach reports. So it's good to have you on a call.
You bet. Glad to be here.
Yeah, thanks. So, hey, real quick, since this is your first time on a mortgage coach call, if you could just tell everybody what market you're in and a little bit about your mortgage practice, and then let's get into a couple strategies and ways that you're using Mortgage Coach and Bridge Builders.
Sure. Well, I am in Denver, Colorado, and we have sun for the first time in like 2 weeks. We're all like in withdrawals right now, as a matter of fact. It's great. I've been in the business for 25 years, and I've been with Cherry Creek Mortgage Company for 19 of those. And we close between $40 and $50 million a year and help about 200 families a year into homes.
Well, I love the fact that when you shared your story, you focused on the families. We help about 200 families a year. So that was just great to hear you tell your story in that way. So let's keep it centric on that, because at the end of the day, I think one of the things that's finally got you to where you have this why around using Mortgage Coach is you started to realize that, hey, this is a great way for me to add, more value, help people make more confident decisions. But what led me to ask you today is that Steve Harney and I are becoming better friends and partnering more, and his insights, they help people make better decisions. If you could, let's focus the call around how you're using Bridge Builders, and then also how you're using Mortgage Coach to deliver, let's just call it a better educational experience to families.
Sure. I've been a Bridge Builder member for, I don't know how many years now. It feels like 100. But I am just such a big proponent of Steve Harney. I was on that call last week, and you can tell from, just how he approaches the market. He's all about educating and giving information and helping people make good choices based on that. And for me, that's the reason that I use Mortgage Coach, is that I think inaction is almost always caused by a lack of understanding about the buying process, about the market, where they are. And those two things together really give me the ability to deliver consistent information, but in a way that's understandable for the consumer so that they can take action. And when we look at the families that we can help, we want to help them, make, it's probably going to be one of the biggest decisions that they will ever make. And between the Bridge Builders information and the way that Steve just has a gift, in my opinion, of taking the complex and making it simple and putting it into a format that can easily be understood. He tells me all the time, a picture is worth 1,000 words. And I think the same holds true for Mortgage Coach. I think you've had very great success taking something that might otherwise elude people, and we can actually put it in terms that they can understand and see and touch and feel. Excuse me, and understand and take action on as a result of that.
Got it. So now you've been using bridge builders for a long time to be a better teacher, to be more efficient at having a conversation with a realtor or a borrower in a way that takes market knowledge and makes it simple and easy. How long have you actually been using Mortgage Coach, and how many times do you think you've actually created a video so far?
We've been using it since February of this year, so I'm just a baby when it comes to that. We've probably created 50-ish videos, somewhere in there. I have not done one on the mobile app yet, but that's on my list to do today, as a matter of fact. But like everybody has said, I mean, that video is I shouldn't say it's not just the video, it's the data and the way that we can deliver it with the video that I just feel like we can just reach out of our computer and wrap our arms around people and say, this is what this really means to you. Yes, the numbers are important. Yes, you have to understand the financial pieces of all of it, but really we want to help you make a good decision for your family, and Mortgage Coach helps me do that.
So it helps you go and deliver something personal with your brand on it, both company and personal. By the way, reminder to everybody, and shout out to Ken, we're helping you show the cost of the loan over 5 years. And we're not only doing that in a way that is post-TRID compliant, but in a way that's just a better educational experience for the family. And then, of course, you can put the video on it. So Lori, because you're new to Mortgage Coach, but yet you're not new to being an incredibly successful, high-producing loan officer, the biggest challenge we hear is that it's hard to create that video, that first video. If you could just speak a little bit to your, call it your first 10 Mortgage Coach TCAs, and then speak to where you're at today, and do you feel that it's actually saving you time? If you could just.
Sure. So the first one is hard, I will tell you that. I've been doing video for a really long time, and my general rule is that I record them and I do not watch them. Now, somebody on my team, my marketing director, watches them to make sure we don't have some big old flub, but you challenged me on that, Dave, and I think the best advice that you gave me throughout the entire process was to do 10 your first week. Not 10 as soon as you can, not 10 the first month, but to do 10 your first week. And it just made me form a habit. I committed to you that by February 28th I would have it integrated into my team. And by doing 10 that first week, it really made me, just develop the habit. It has become so much easier, and it's actually almost fun now. It's kind of my favorite part of the process. And I agree with what you guys talked about earlier, and that's the 1 or 2 minutes that it takes me to create the video. I'm a hammer on efficiency, and so we monitor how many times people watch our videos and and who's watching them. And I'm telling you, they're played multiple times, and I have a feeling it's the client going back and playing it for the spouse. And that's a conversation that I no longer have to have with the spouse. I'm always happy to do it, but from an efficiency standpoint, that 1 or 2 minutes is absolutely hitting it out of the park in terms of us not having to, the client calls back and says, okay, now I know you told me the difference between the 7-year ARM and the 30-year fixed, and now they are able to kind of self-diagnose and listen to that information over and over again, such that we don't have to have those conversations with the clients. And so it's been a huge efficiency for us. Beautiful.
And again, in today's market, when everybody is super busy, because the biggest objection I hear to folks is, oh, I don't have time. I'm just, I've got between refis and a great purchase market, I'm slammed. And so hopefully we're going to grow everybody's why that, it's not that it's just a better sales experience. It's not that it's just a better educational experience for the family, but it saves you time. You're taking something that would take you 5+ minutes to write an email, something that would only go to the borrower, and with Mortgage Coach it's going to everybody, and something that's helping you go from generic market insight to personal insight. So, Lori, part of my goal in having you on the call and having you share this is just that you are super successful. You're a dedicated teacher, and I really wanted to bring that out to the mortgage coach community, how you're using a combination of Steve's advice, our advice, and you're doing it to serve the family. Anything else you want to add in today's conversation for everybody that you think would be useful to mortgage coaches?
No, the only thing I'll say, Dave, is that that was me. I mean, you for years and years and years have been on me to use it, and so I would just encourage anybody who's questioning that. I don't have time to learn it. I'm too busy. I really feel like I just had to make the decision, and now I realize I was too busy not to use it. So I would just really encourage people to jump on there and figure it out. And I think I haven't even told you this, but we've gotten calls from 3 different real estate agents, who 2 of whom are top producers that actually have sought us out as a result of the mortgage coach analysis tool. We send it to our clients. Their clients shared it with their agent, and their agent called me and said, we got to talk. This is amazing. So I really think not only will it help you become more efficient, but I think it will help you grow your business as well.
Well, Lori, I know how busy you are in the loan business, helping families and helping realtors. I would love for you to stay on the call, but also understand if you do need to jump. But thanks for bringing your story, bringing your why to the mortgage coach call. And I am looking forward to dedicating a whole call and really interviewing you on your journey as a mortgage coach. So thank you so much, and look forward to hearing your success story to come. Anything else you want to add before I bring in the next guest?
No, absolutely happy to help.
All right. Hey, Ken Perry, anything you want to ask Lori, or any color you want to bring to this conversation?
You know, I just love hearing when we all have those things that we really should be doing and we want to do, and it's I love hearing when somebody actually got around to finally doing it and is really enjoying the success she's having. So very cool.
Right on. So reminder to everybody, the homework assignment for today's coaching call, and what I want to create the most awareness and value around, is the new ability to create videos from your mobile app. So make sure, first of all, your app is updated and you have the newest upgrade to the app, whether it's an iPhone or an Android. And in the top left-hand corner, you'll see that profile. You click on that. So again, there's the arrow, upper left-hand corner. Click on that. Now you'll be able to log in to the Mortgage Coach Pro edition, and you'll have a whole new capability. And I'll walk through this a little later in the call. But if you click on Partners, that's where you add open house videos and co-branded mortgage coach experiences. You click on the client. That's where you add a borrower conversation. And then Performance is a whole new feature in your ability to really track your mortgage coach reports. Because let's face it, they are a high impact point of contact. You know, when you really look at the success of most mortgage professionals, it's how many phone calls, conversations they have a day, how many realtor meetings that they have a day, and how many total cost experiences that they create for families and realtors. And now you can start tracking that in the palm of your hand. So our next guest is Sean Herrero with RPM. Sean, welcome to the call, my friend.
Thanks for having me, Dave.
Well, thanks for being here. So, Sean, I do believe this is the first time I brought you into our Tuesday sales call. So if you could just give everybody a little bit of your backstory, what market you're in, and what your role is in the industry.
Yeah, absolutely. My name is Sean Herrero. I'm with RPM Mortgage. I've been with RPM for about 5 years. And while I'm in an origination capacity, I'm more focused on coaching and mentoring. I've been in the industry for 15 years. I was a wholesale rep prior to joining RPM. I worked at Washington Mutual, Countrywide. Countrywide turned into B of A. Was number 2 in the country when I left B of A to join RPM. Started when I was 19, so I am that quote-unquote millennial age person. And that's what's made using Mortgage Coach a lot of fun for me, is getting to take all this knowledge that I have over my career and using it to market to that younger generation.
Well, Sean, for those of you that don't know Sean yet, you get to know him because the way he's using and creating videos is fantastic. I've got to know him well because RPM is a good partner of ours, and he's typically featured at their sales rallies. He creates these, I mean, super useful but super funny videos, and leave it to Sean to innovate, any mortgage coach feature. When we first came out with our Rate Watch mobile app, he created a super fun video with a GoPro camera on his head, and he kind of drilled down on that. So Sean, appreciate all the leadership that you you bring to the mortgage coach community. It's good to have you on our Tuesday call. So why don't you tell us what you're doing to use Mortgage Coach at open houses, and also share what I think is an innovative way to use the mobile app to create videos and add value at open houses. Tell us what you're doing.
Yeah, absolutely. So I started using Mortgage Coach, I guess it was last August, when I was asked to introduce Dave Savage and Mortgage Coach to at our sales rally, and I didn't know. I knew of Dave, I didn't know him, but I didn't know what Mortgage Coach was, and there was no way I could be fake and introduce somebody that I don't know about. So I spent the following week, 4 a.m. to 6 a.m., 2 hours a day, learning Mortgage Coach and what it does, and was really blown away by what a huge tool it is. And everyone that's used the video part knows that making these videos is uncomfortable, and it took me years to kind of embrace it, and like everyone knows that's doing this consistently, now it's simple. So I like to have a lot of fun with my videos. The thing I like about video versus an email is I get to show my personality. I can smile and make sure, you know, it's a comfortable experience for the client or realtor that I'm working with. When Dave told me that they were going to roll out a mobile version of the camera, I immediately knew exactly what I was going to do with that. While I love making the videos on my laptop or on, you know, at home or at my office, that's great. But I went, you can do a virtual tour with your phone, and I didn't do this with a GoPro. I did do this with my iPhone, just on a quote-unquote selfie stick. But went through one of my realtors listings that I was hosting, just said I'm going to try this idea out, and made a quick video that said, here's the address, we're open from this time to this time, come check it out. And I always do rent versus own, again, targeting millennials in the San Francisco Bay Area. You know, people are renting for $3,000 to $5,000 a month. It is by far it's cheaper to own than it is to rent in our market, and I really try to make sure I make that point. And so the little video you're seeing here, it was that video where I made the video, and then obviously the data and analysis is sitting in the background.
Love it. So I'm actually gonna pull up and make sure everybody kind of just gets a shot of this. This is the video on my iPhone, and just want everybody to get a feel for this. So if you could walk everybody through the actual strategy real quick, and walk, you know, tell us what you did, and, you know, what is the mortgage strategy? Because at the end of the day, you want to try to use these videos to help a realtor deliver more value to the people coming through the open house, capture more leads for themselves, and capture more leads for you as the loan officer. So walk us through that a little bit.
Yeah, so the idea for me is, again, I'm in more of a coaching, mentoring role, and I always ask myself, why can't I? And there's a lot of things that I think we can do to differentiate ourselves. And when I'm approaching a realtor, you know, what makes me better than my competition? I'll say that I'm more innovative. I'm going to do more to drive more potential buyers into their listings and get more realtors on brokers tour to come to their listings. So what I've been trying to do for a while is you can share your Mortgage Coach presentations on Facebook, and I really was trying to figure out a solid way to do that and make it interesting, and that's what this video was made for. So this video was posted to my Facebook page, the realtor posted it to her Facebook page, and just gave us an innovative way to get in front of a lot more people faster. So using the mobile tour and kind of showcasing the home in the background while I walk through and say, if you're renting for $3,000 a month, you can easily afford this home. You can see the data right behind me to show you how easy this can be. Please call me and let me know how I can help you. That's kind of all it is. Very short and sweet video. And it took me probably 3 takes because I wanted to give it's a 3-bedroom, 2.5 bath, 2,400 square feet. But taking that part to the next level, why can't I have the realtor do that part with me? I mean, we can really integrate our relationships with our realtors using this service. I mean, it just takes it to the next level.
Beautiful. So for everybody, just breaking this down, using a Mortgage Coach TCA, adding a video to it. In this particular use case, it was a rent versus own. It was a property that would have rented for $3,000 a month, and Sean, broke it down from what was the monthly difference in monthly payment, what was the net worth difference based off the assumptions over 3 years and over 20 years, and again, he used a selfie stick. And Sean, I know you said I could share this, You okay if I share this video? And I know you created another one that I can put on the Mortgage Coach Facebook page.
Yeah, absolutely. And again, this is all, it's uncomfortable, but it works really well. And it's just one thing I wanted to reference real quick that Dave showed is I do 3-year comparison and 20-year. For the short term, I always do 2 to 3 years because, you know, younger buyers can't see 30 years or 20 years down the road. And then I do the 20-year because that was advice I was given by a financial advisor to show more net worth over time. So I always go short-term 3 years and long-term 20.
Okay, great. And then, of course, everybody, with TRID coming, the 5-year is just going to be one of those things that's it's a compliance piece. So do make sure that you're getting used to that now. And by the way, Ken, that's a great talking point as we bring you into the call to talk about, you know, the cost of loan over 5 years. So, Sean, anything else you want to share with the Mortgage Coach community before we bring in Ken and we start really drilling down on this?
All I'd say is that the way that I look at video messaging and using Mortgage Coach is not everyone's doing it yet, but I do think it's the next way to communicate. And the sooner we all jump on it and really become proficient at it, the further ahead we'll be of our competition. So if you're not using the video, definitely start using it. I use it daily, and it's a lot of fun. It brings the fun part of the business back.
Right, and let's face it, it's always been important and valuable to make sure that the buyer and the realtor and the loan officer are all in the loop around what the mortgage options are. But with TRID coming, there's an even higher standard of how we communicate, how we educate, and how we create expectations. And so the bar is rising, and here's the deal, everybody. From a why perspective, the only challenge is creating your first 10 Mortgage Coach videos. That's hard. That's really hard. But once you've done those 10, your next 10 are super easy, they are easier. And by the time you've done this 20 to 50 times, just like Sean, just like Lori, Josh Metal, just about anybody that's ever become a mortgage coach who's creating videos and audio narration, they'll tell you that it just saves them time and it converts more business. So Sean, thanks for the value. Want to also remind everybody, in the new Mortgage Coach mobile app, you can track your Mortgage Coach reports. So not only does it show you how many Mortgage Coach reports you're creating weekly and monthly, so a key performance indicator for everybody, call it a KPI, but it also shows you how many of your clients are watching that. So it's giving you, call it BI, business intelligence, to help you be a better salesperson, help you deliver more value. And then, of course, I would be remiss if I didn't remind everybody, not only can you create a video, but you can drive Edge Live. So that middle button where it says live reporting, if you click on that button, now you're driving a Mortgage Coach live experience. So I'll focus on that more in future calls, but for today's call, really want to create a video, add it to every Mortgage Coach report, and it'll save you time, make you more money. So Kim Perry, I'm going to bring you in about 1 or 2 minutes. I wanted to give Danny and Lori a chance to, if anything else has come to mind, if you have a question for each other, Danny and Lori, anything you want to add to the call before I bring in Ken?
No, the only thing I have to say is that just blew my mind, Sean, walking through the open house with the video. That's incredible.
So does that mean that the Gaylord Hanson team is going to give that a whirl?
It's definitely on the list. You know how many things we have on our list already, Dave, that we desperately want to be doing. So it's definitely on there, though.
Right on. Well, hey, it's always a good opportunity when you get great people on a call together, getting ideas from each other. Lori, anything you want to add before we bring in Kim Perry? All right, guys. So Ken Perry and I are going to be doing a compliance call in June that's really going to be tactical in helping the Mortgage Coach community deliver not only a TRID compliant borrower conversation, but doing that in a way that gives you a competitive advantage. Do that in a way that actually improves your business. So stay tuned for more from Ken and I on this topic. I'm a huge fan of Ken Perry for 2 reasons. One, well, actually many reasons, but the 2 that I'll talk about in this call is that he takes compliance and he puts some humor around it, makes it fun, and he does it in an awesome way. But 2, he's dedicated to really improving how we train. And so big fan of the Coop, and all the lenders and clients of ours that have this love the fact that Mortgage Coach content is in this, and just helps sales training. When you could take your compliance training and your sales training and kind of put them together, I think it's just important with TRID. So Ken, if you could, one, add some color to what you've heard today from some of the speakers. Also, what do you want to tell the Mortgage Coach community as we're just days away from June, which is only going to put us a month from July, and by the time we get into July, it's like game time. The race, it goes from being a jog to a sprint to prepare for TRID. So what advice do you have for everybody?
Well, first off, this has been a great call. I really, really love seeing all of the mobile stuff. I mean, really, what you're looking at is what's going to be expected, not, this is an advanced thing for the industry right now, but everybody who gets in this and starts using mobile like this, it's the expectation, especially of the millennial. And so you're doing something right now that you need to be doing. This isn't a plus, it's a must. And so so I see this. I also, I think people don't think about the CFPB as being extremely innovative, but they're crazy innovative. Their technology is, they're using good technology, they're expecting us to use good technology, and they want technology and communication to go together. So every time I'm on one of these calls or looking at what you're doing, Dave, and the advancements you're making, I think about how that's exactly what the CFPB is looking for, is more communication with the consumer so that they know what to expect and they're not waiting until the very last minute to find out, what the details of their loan are. So everything that people have access to through your system, they need to be using so that they can be ahead of where their regulator wants them to be and communicate. And as we get closer to August 1st, communication becomes even more important, obviously with borrowers, but really with real estate agents. And I would caution you guys, just as you get closer to TRID, I'm seeing a lot of people do education for realtors and kind of getting out there and getting in the marketplace with information. I'd encourage you to make sure that you're bringing the message of hope. You guys have the ability to use this technology to communicate better, and you probably, if you're on this call, you're probably also focusing a lot on communication in general with your consumer. And so bring the message of, we're going to be able to do things really successfully, instead of what I'm seeing a lot of, which is, oh my gosh, extend all of your closings 15 to 30 days, like give me more time, we need more time. Just, it's not necessary as much as it's being pushed. So I'd encourage you to make sure that you're on top of your game, going into August. I think the sprint has really started a month ago, just in the way that you're communicating with the realtor. And think about it, if the realtor's just hearing about how much of a pain this is going to be, and you're the one saying, actually, we're really good at this, and we are, we're already getting deals out, early to make sure that we're ready to go. I think that's the message you want to send. So this is just, the technology here is just another way that you're communicating that you're the more advanced originator.
So think about it, folks. When you're able, realtors know about this, so this isn't one of those compliance changes that, it's only for the lending industry. It's not for realtors. They're very aware of it. Every loan officer out there is bringing this conversation to the marketplace. And to Ken's point, not everybody is doing it in a way that's super pro. Not everybody is, talking. One of the biggest things I think I see missing is the industry's not talking about the cost, some of the benefits. The fact that showing the cost over 5 years is actually, not just a compliance requirement. It helps the buyer make a better decision. And when it comes to having the rent versus own conversation, it helps people understand the value of homeownership. So Ken, if you could cover some of the talking points that you think loan officers should be sharing with realtors, since I think right now it's not so much what they do in the buyer conversation, aside from the cost over 5 years, but what should they be sharing with realtors that delivers leadership and hope?
That's a great question. So and we're going to flesh this out a lot in our June call, but the first thing I would say is that whole extent, or write me in an extra 15 days. If you do the math on the loans that we're doing and just how long you need, the worst case scenario is that you deliver your TRID or your closing disclosure, and then something happens 3 days in and you have to deliver another one. So, and that's horrible. That's a worst case scenario right there. So worst case scenario, you really are just extending it 3 days. So the 15 days seems really crazy. And we'll be able to get out our disclosures 3 days prior too, because we're just going to get better at what we do. A lot of the people on this call are not shocking people with docs on the last day anyway. You know, you're able to give them to them 3 days prior. So I think the first thing I would tell your realtors is don't be scared. But then the second thing I would say is there's never been a better time for us to get really tight with our realtors when it comes to strategy. And so what I'm telling my loan officers to do is get in front of your realtors and say, look, when we're doing a deal together, it's not going to be about whose job is what. It's going to be about getting the deal done. And so our ultimate goal is we've got to get these disclosures out as fast as we can, the closing disclosure. And so if, tell your realtor, if I need you to drive to that person's house and pick that thing up, then I'm going to need you to do that. If I need you to, let's say I've got my lender's mailing my documents, which I think is crazy. Everything should be e-docked. But if I'm mailing the documents, or if the borrower doesn't have an email address, there may be a time that I need my realtor to turn into a courier for the day and drive those documents out to the consumer, depending. I mean, I'm going to try to do it myself, but let's just go into it saying whatever it takes to get this deal done, we do not have time to waste, and we want to get crazy efficient on everything. So I think that's a big message to send them. It's not going to be scary, but there will be times that I might need something from you, and we've got to stay in constant communication. So everything goes to communication, right? Making sure that everybody knows where we are at all times. And I think, as technology advances, we'll have portals where people will go in and be able to track things, and it's going to be easier. But until then, we just have to up our communication with everybody. So I think that's it. Don't be scared, and I might need you, so be ready. I think those are the two big things I would say to people.
Got it. So hey Danny, real quick, what are you guys, what are a couple of the top talking points that you're sharing with your realtors right now? May align with what Ken brought up, or it may be something different. Anything you want to add to the party here?
Yeah, I mean, the main message that we're trying to communicate is that the only people that are, so the mantra out here is 45 is the new 30 for closing. And what we've been trying to create a counterpoint is that the only people that's going to be true for are people that aren't prepared and that aren't putting systems in place to get ahead of this. So I think it aligns really perfectly with this message.
And I think, Danny's strategy with the counteroffer analysis and with the, cross-qual, never a better time to get your realtor on board strategically. So make sure that, they understand how you're delivering a mortgage coach experience, and understand how that's not just valuable for the family, it's valuable for the realtor. And so, Danny, when you think of the amount of education you provide to your realtors around mortgage coach and why a TCA and how you deliver advice, think of the loan officers that aren't doing that right now. How important do you think it is when you look at just, your overall success, and what advice do you give to the loan officers that aren't having that mortgage coach conversation with realtors? Anything you want to add to that?
Well, I mean, this is all just a matter of perspective, and I can kind of rewind back, 3-4 years, and our team was so frustrated with all the regulation and the ability to repay and having to anticipate all these changes. And one day we woke up and just said, you know what, this is a great opportunity, because we actually have the strength and intelligence to navigate through all this complexity where most people don't. And now what happens like this, TRID is a great example. Instead of seeing it as this big obstacle that we're going to have to overcome, we're looking at it as a huge opportunity to provide more value, to separate ourselves even further from our competition, and get that much farther ahead. So, I mean, to your point, Dave, getting the total cost analysis in play, using it as a tool to preempt our competition, using it to integrate with our eventual disclosures so that people are never surprised about what they're going to be seeing on their cost worksheet under TRID. I mean, it's just, again, a huge opportunity for us to separate ourselves from the competition.
Love it. So for any managers, I know we have a lot of heads of production that are on this call, and branch managers. I think it's important to realize it's more important now than ever that when you train your loan officers that you do it efficiently. I hear a lot of people, how do you train? Oh, we did a webinar. Well, do you know that the loan officer actually watched the webinar? Did you test them afterwards? So systems like Ken Perry's Knowledge Coop, you know, I know a lot of folks that are in the mortgage coach community use the Knowledge Coop because you can put the sales training content and the compliance content all in the same place. And when you assign the training, you can know if someone went through it, and you can test them for understanding. You know, just 3 or 4 simple questions to go, oh, they actually watched the video, they actually learned what I wanted them to learn, and they know it. So I push every leader on this call, whether you're a branch manager, whether you're head of production, it's time to get smart with how we're training and how we're preparing folks to be compliant with TRID. And so, you know, again, for everybody that's on this call that you are a Knowledge Coop customer, there is a mortgage coach area where you can go in and actually grab our content, whether it's sales content within Mortgage Coach, whether it's compliance content. You know, sales training is more important than ever. And that's one of the reasons why we kicked off this Mortgage Coach University, because the industry needs to turn, you know, this change in regulation into a competitive opportunity. And so, you know, the first three weeks of every month, every single day, we're training at 9 in the morning, or excuse me, 8 Pacific, and we're training at 2 Pacific around Mortgage Coach, how to have a borrower conversation in a way that helps a family make a more confident decision and helps a family understand their cost over 5 years. So again, every Tuesday, we're doing the 9 o'clock sales call like today. So it's all about, you know, inspiration, ideas, strategy. Every Thursday is about tactical. So this Thursday, we're going to focus on the cost of waiting, as I mentioned earlier, and let's also focus on the rent versus own. And then every Friday, we do basic training. If you're brand new to Mortgage Coach and you have not created 20 TCAs yet, every Friday at 9 o'clock, we're doing a training. So Ken Perry, as we go into wrap-up mode, we've only got a few minutes left. Wait, before I give you one more chance, Ken, anybody know that I'm gonna be interviewing Ken, and it's gonna be a call where he is the featured guest in June. What questions from a TRID perspective do you have? Please put that in the GoToMeeting question area. We're not gonna answer those in today's call, but I'm gonna use that to stack the deck for our call in June. So if you have questions for Ken Perry around TRID preparation, please put those in the GoToMeeting question section. And while Ken is providing some closing thoughts, please let us know what you thought of the value in today's call. Please fill out the survey on a scale of good to wow. Let us know what you thought of today's hour. So Ken Perry.
Yeah, thanks, Dave. I would say for everybody on the call, if the faster you get up and running on getting video through mobile, the more competitive you're going to be as everybody starts using this. And so you want to be the leader out there. It's just like I've heard so many times with video. Oh, I really have to do video. I really should start doing video. Well, at some point, everybody that's fighting against you for deals is going to be doing video, and you'll still be saying that. So I'd encourage you, make today, set aside some time, and start working on this so that you could be the one really at the forefront of that. And then don't be scared about TRID. We'll cover a lot of things on that next call that I think everybody needs to hear, just getting comfy with the closing disclosure that you'll be explaining. So yeah, thanks for the call, Dave.
Yeah, so fill out if you're a guest on today's call and you'd like to get a demo, click the last option. Let us know what you thought of today's call. Also, again, just closing thoughts. Make sure you understand how to log in. Click in the upper left-hand corner of the Mortgage Coach app. Make sure you log in. This is the same username and password that you have in Edge, and go to work. Performance through your KPIs, Mortgage Coach key performance indicators. Click on client to actually create a borrower video, and click on partner to add a co-branded video. So it is a wrap for today's call. Everybody, thank you for making time to join us on today's call, and everybody have a great day, great week, and we'll see you next week, Tuesday, 9 o'clock Pacific. Take care, everybody.